Good morning. The meeting of the SIRS Board of Directors is now being recorded for record-keeping purposes. By participating in the session, you are consenting to the recording, retention, and future viewing of this meeting. This meeting is now being live-streamed. Please proceed.
Thank you very much, and welcome everybody. This regular meeting of the State Employees Retirement Board, March 4th of 2022, will now come to order. Could we have a roll call of the board, please?
Absolutely, Mr. Chairman. I understand Mr. Becker is traveling and won't be with us today, so I will not be calling his name for roll call or for motions. We'll start with Senator DeSanto or designee.
Senator DeSanto here.
Chairman Philman.
Present.
Representative Frankel or designee.
Here.
Treasurer Garrity.
I'm here.
Senator Hughes or designee.
Matt Lindsay on behalf of Senator Hughes.
Mr. Jordan.
Here.
Representative Schemmel.
Here.
Ms. Soderberg.
Here.
Secretary Thal.
Here.
Secretary Vague or designee.
This is Alan Flanagan on Secretary Vague's behalf.
Thank you very much, Alan. That concludes the roll call.
Okay, we have a quorum. Before we start today, in 1865, Abraham Lincoln was inaugurated for the second term, and the end of the Civil War was in sight on this day way back when. So something to think about. With that, I need a motion is in order to adopt the agenda of for March 4th, 2022, the board meeting which you have. A motion to that effect, please.
So moved.
Do I hear a second?
Second.
I hear a second. Is anybody on a question? Anyone on the question? Hearing none, all in favor, aye? Aye.
Aye.
Any opposed? Motion is carried. Also, we need a motion is in order to approve the consent calendar items as listed for the March 4, 2022 board meeting. A motion to that effect, please.
So moved.
I heard
Second.
a motion. Do I hear a second? I hear a second. Anyone on the question? Anyone on the question? Hearing none, all in favor, aye, please. Aye.
Aye.
Any opposed? Motion is carried. We'll now go into the regular agenda of the board, and the committee reports. Action items is up first. Board governance and personnel committee motion or agenda, which I will, as chair, I will take over. The board governance and personnel committee met on February 25th. We were supposed to meet at 9 a.m., but it didn't happen until 9:54 due to some technical difficulties. The attendance of the committee, we had full complement of the board and or designees, so we did have a quorum as a full board, full committee. We had a previous, during the technical difficulties, we did have a previous executive session, and the committee held an executive session just prior to the commencement of the meeting to discuss the following items: the investment professional pay adjustment, investment office and annual salary adjustments for investment professionals. SIRS fiduciary review and board of self-assessment, the final report, implementation of recommendations. The committee received update on recommendations from Funston's final report that were assigned to the committee and took specific action regarding the following. The first was the State Employees Retirement Board educational training plan for board members and designees, and it's outlined as far as the changes and the adoption that we had. We took action to recommend to the board to approve the educational training plan to include the following additional investment education training goal, which is included in the attachment, which is understand the sources of investment fees and other expenses, as well as key elements of fund and manager fee terms. We did have a roll call for the vote. It was unanimous. So with that, I move that the State Employees Retirement Board accept the recommendation of the Board Governance and Personnel Committee to approve the State Employees Retirement Board educational training plan for board members and designees as set forth in the attachment. Do I hear a motion to that? It's moved. I'm sorry. It's moved. Do I hear a second?
Second.
I hear a second. Anyone on the question? Anyone on the question? Roll call vote, please.
Yes. Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Unanimous vote.
Thank you very much. Going on, the committee received an information item, an update on the fiscal year 2021-2022 strategic goals. We then reviewed the Board Governance and Personnel Committee work plan for 2022. After we had some discussion, the motion to approve was unanimous for the committee. So with that, I move that the State Employees Retirement Board accept the recommendation of the Board Governance and Personnel Committee to approve the 2022 Board Governance and Personnel Committee work plan as set forth in the attachment. It's properly moved. Do I hear a second?
Second.
I hear a second. Anyone on the question? Anyone on the question? Hearing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Aye.
Unanimous vote.
Okay. After that bit of business, we went into the investment professional pay adjustment investment office. As a follow-up to the earlier discussion executive session regarding investment professionals pay adjustment, the committee took action to approve and grant Portfolio Manager 1, Jared Snyder, a 9% hourly pay increase to $88.53, retroactive to December 20, 2021. It was unanimous, and this action is exclusive to the Board Governance and Personnel Committee, so it won't be brought before the board. We did go into annual salary adjustments for investment professionals, the investment professionals excluding the CIO, and this again was taken up in the executive session, and the salary adjustments are set forth in the annual salary adjustments for investment professionals 2022 is attached, effective the full pay period of March 2022. The vote was 4 yes, 1 no, with an explanation as you have in your attachment. But again, this too is action taken solely by the Board Governance and Personnel Committee. And we then went to discuss the Chief Investment Officer, and following discussions in the executive session regarding salary adjustments for investment professionals, the committee took action to recommend to the full board a pay adjustment for the Chief Investment Officer effective the full pay period of March 2022. The vote was unanimous with the committee. So with that, I move that the State Employees Retirement Board accept the recommendation of the Board Governance and Personnel Committee to approve a pay increase to $173.64 an hour for James Nolan, Chief Investment Officer, serves effective the full pay period of March 2022. It's properly moved. Do I hear a second?
Second.
I hear a second. Anyone on the question? Anyone on the question? Seeing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Unanimous vote.
Thank you very much, everybody. And finally, the follow-up and next steps. The SERS HR will work with the HR Service Center to transact the approved pay increases, and SERS staff will continue to review the SERS fiduciary review and board self-assessment, the final report recommendations with the committee at future meetings. The meeting was adjourned at 10:18 a.m. I'd like to thank Katie Matthews and Chris Houston for the work in getting this all together for us. That concludes the report of the Governance and Personnel Committee. Next up is the Finance and Member and Participant Services. Chair Soderberg.
Mr. Chairman,
Yes.
there's just a couple other things. One is we do have an action item relative to the amendments to the committee charters. That's regarding the Audit Risk and Compliance Committee, the charter, and the Board Governance and Personnel Committee charter.
Yep.
Did you want me to cover those items now?
We can cover it, and then I have a motion, but go ahead.
Okay, yeah, just very briefly, in Board Docs under 5A, you'll find a memorandum from me to the board, giving the background as to the reasons for the amendments to the charters. Essentially, these are follow-ups to the recommendations from Funston in their fiduciary review and board self-assessment report. The Audit Risk and Compliance Committee charter revisions provide clarification as to the process by which the evaluations of the internal audit director and the chief compliance officer are undertaken by and the role of the committee in that process. And then the Board Governance and Personnel Committee charter is amended to provide for the process by which the annual employee review is conducted of the chief counsel. We will be, if the amendments are adopted, staff will be developing a process document for board committee involvement in the performance reviews of those positions.
Any questions for Chris? Okay, with that, I move that the State Employees Retirement Board accept the recommendations of the Audit, Risk, and Compliance Committee and the Board Governance and Personnel Committee to approve the amendments to their respective charters as set forth in the attachments. It's been properly moved. To hear a second?
Second.
I hear a second. Anyone on the question? Anyone on the question? Hearing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Unanimous vote.
Thank you, everybody. Okay, we now will get back and have Finance and Member and Participant Services. Chair Soderberg.
Thank you, sir, and good morning, everyone. I will be reporting on two recent committee meetings of the Finance and Member and Participant Services Committee. The first meeting was on January 12th, 2022 at 10:30 a.m., and this was our organizational meeting where I was elected committee chair for the 2022-23 term, and Secretary Richard Vegg was appointed as assistant chair for the same period of time. The second meeting was our first business meeting of the year, and that was on February 25th, 10:22 a.m. And I'd like to also mention that both of the reports for these two committee meetings are on board docs under item 5B. Anyway, at the February meeting, the first order of business was to approve the minutes of the September 28th, 21 meeting and the January 14th, 2022 organizational meeting. The only business that was discussed by the members of the committee was our committee work plan, which is part of the report on board docs. Sarah McSurdy, our Chief Financial Officer for SERS, reviewed the work plan and gave us some highlights on some of the items for the year. I then noted to the members of the committee, reminded them of the results of the Funston report about actuarial recommendations, and what I had discussed with the Chair Philman and our Executive Director Joe Torta and Sarah McSurdy, our CFO, was a plan to continue having our actuaries, Korn Ferry, make their presentation and recommendations to the Finance and Member Services Committee, and then being available to answer questions at the board full meetings. But in addition to that, we plan on having the actuaries available for educational sessions whenever possible, and Korn Ferry will be coming in later this month for our retreat to make a presentation. So that concludes my report, Mr. Chair, and I would like to make a motion with regards to our work plan.
Go ahead.
I move that the State Employees Retirement Board accept the recommendation of the Finance and Member and Participant Services to approve the Finance and Member and Participant Services work plan as set forth in the attachment.
Been properly moved. Do we hear a second?
Second.
I hear a second. Anyone on the question? Anyone on the question? Seeing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Ms. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
It's a unanimous vote.
Thank you very much.
That concludes my report. Thank you.
Thank you, Chair Soderberg. We will now go into the Investment Committee report to the board. As you heard, Glenn Becker is not with us today. As the assistant, I will give the report. We met on February 25th at 10:10 a.m. At 10:37 a.m., it actually was called to order, and Bill Trong of SERS conducted a roll call. We approved the minutes. We did the general business as we went forward, and Jim Nolan provided a review of the Investment Committee work plan. As a result of this review, a motion by the committee was considered, and as a result, a motion by the committee recommending that the State Employee Retirement Board approve the Investment Committee work plan was adopted by 11 votes yes and 0 no's, which was unanimous. So as a result of that, I move that the State Employees Retirement Board accept the recommendation of the Investment Committee to approve the Investment Committee work plan as set forth in the attachments. It's been moved. Do I hear a second?
Second.
I hear a second. Anyone on the question? Anyone on the question? Seeing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg. Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Unanimous vote.
Thank you very much. Also, as we went on with the committee business, Tom Schindler of Callan provided us with their 2022 investment initiatives. We also had a key highlights of the quarterly investment performance as of December 31st, 2021 for the defined benefit plan, and also some details from Callan as well. The investment committee had an update on the SERS asset allocation, and this is going to be an ongoing piece as we continue to discuss the best way to handle the presentation of the asset allocation as well as the actual numbers themselves. So we'll continue to discuss this with the SERS staff and consultants and readdress at a future investment committee meeting. We then had a presentation under SERS private equity, pacing and manager performance for First Francisco Partners. It was an introduction of the partners funds being presented. Mike Elio of Stepstone provided additional support, how the proposed funds being presented positively fit into our private equity portfolio. And we had a presentation by the investment manager itself. After the presentation, a motion by the investment committee was considered, and that was for $100 million to Francisco Partners 7, $50 million to Francisco Partners Agility 3, and $50 million in a sidecar co-investment. It was unanimous for that recommendation. So with that said, I move that the State Employees Retirement Board accept the recommendation of the Investment Committee to commit up to $100 million to Francisco Partners 7 LP, 2, up to $50 million to Francisco Partners Agility 3 LP, and 3, up to $50 million to a sidecar vehicle that will co-invest alongside the Francisco Partners 7 and or consistent with and or Francisco Partners Agility 3 plus investment expenses and pro rata share of partnership operating expenses consistent with executed partnership documents as follow-on investments within the private equity asset class, subject to successful completion of contract negotiations and execution and delivery of closing documents by all parties, including required Commonwealth legal approvals within 12 months. It was a unanimous of the committee. It is so moved. Do I hear a second on that motion?
Second.
I hear a second. Anyone in the question? Anyone in the question? Seeing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Unanimous vote, Mr. Chairman.
Thank you very much. The committee then had a presentation from Toma Bravo, provided data on their performance and transparency items for Toma Bravo. That was by Jim Nolan. As a result, the investment committee recommended that the State Employees Retirement Board commit up to $100 million to Tama Bravo Fund 15, $50 million to Tama Bravo Discover Fund 4, and up to $50 million to a sidecar vehicle co-invest alongside Thomas Bravo 15 and or Thomas Bravo Discover Fund 4. It was adopted by a vote of 10 yes, 1 no, and it is appropriate for us now to make a motion on that. I move that the State Employees Retirement Board accept the recommendation of the Investment Committee to commit 1, up to $100 million to Tama Bravo Fund 15 LP, 2, up to $50 million to Tama Bravo Discover Fund 4 LP, and 3, up to $50 million to a sidecar vehicle that will co-invest alongside Tama Bravo 15 and or Tama Bravo Discover Fund 4, plus investment expenses and pro rata share of partnership operating expenses consistent with executed partnership documents as follow-on investments within the private equity asset class, subject to successful completion of contract negotiations and execution and delivery of closing documents by all parties, including required Commonwealth legal approvals within 12 months. It is properly moved. Do I hear a second?
Second.
Second.
I hear a second. Anyone in the question? Anyone in the question? Hearing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
No.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
No.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Thank
Sorry,
you.
balancing.
Motion passes with so noted votes. We then had informational items as listed with the December 2021 asset allocation report. And we entered an executive session, and at 1:06, the public session of investment meeting resumed, and the adjournment of the committee was 1:07 p.m. And it's submitted by Glenn Becker, chairman. That concludes the investment committee report. Our next report is the Audit, Risk, and Compliance Committee. Treasurer Garrity.
Thank you. So our committee met on February 25th at 1:32. After the roll call, Chris Craig, my designee, he called the meeting to order on behalf of the treasurer, thanked the committee members for appointing me to lead the committee, and then we had Ms. Lund took the roll call stating a quorum was present. The committee did approve the meeting minutes of both December 2nd, 2021, as well as January 14th, 2022. There was no old business or presentation, so we went right to new business. Ms. Lynn reviewed the 2022 Audit Risk and Compliance Committee work plan, noting that 2 future procurements will require committee involvement. One of those is for an independent actuary to review Korn Ferry's methods and procedures, and the second is for an independent accounting firm to perform a SOC audit and readiness assessment. The committee then entered into executive session, and during the executive session, I joined the meeting and took over the chair responsibilities, thanking Christopher Craig for his assistance, and the topics that we covered in executive session include the following. So we had a Chief Compliance Officer update. That was the quarterly report as of December 31st, 2021. We had a Chief Information Security Officer update, an Internal Audit Office update, a review of due diligence performed on board-approved investments for the period December 2021, and a review of 2022 performance goals for the Chief Compliance Officer. Note that was an informational item only. So the committee approved the Audit Risk and Compliance Committee's 2022 work plan and passed a motion referring the 2022 work plan to the full board to approve the plan as set forth in the attachment. So I would like to move that the State Employees Retirement Board accept the recommendation of the Audit Risk and Compliance Committee to approve the Audit Risk and Compliance Committee 2022 work plan as set forth in the attachment.
It's been properly moved. Do I hear a second?
Second.
I hear a second. Anyone on the question? Anyone on the question? Seeing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Unanimous vote.
Thank you, everybody. Treasurer?
Thank you. So there were no other new business or further discussion. The committee did adjourn at 2:21, and I would also like to thank Karen Lynn for her support.
Okay, thank you very much. With that, we have the Securities Litigation Committee. Chair Jordan.
Thank you, Mr. Chairman. I'd like to report on the January 14th and the February 25th meetings of the Securities Litigation Committee. On January 14th, 2022, the Securities Litigation Committee meeting was called to order at 10:51 a.m. All board members or their designees were present. The meeting was then turned over to Executive Director Torta for the election of a chairman. I was subsequently reelected as chairman of the committee. Subsequent to the election, the committee gave unanimous consent to the appointment of Senator Vincent Hughes as the assistant chair. That completed our business for the day, and the meeting was adjourned at 10:54 a.m. The committee met again last Friday, February 25th, 2022. The meeting was convened at 2:23 p.m. Sarah Sauter took a roll call to establish a quorum, and I will note that all members or their designees were in attendance. The committee moved and approved the meeting minutes for the September 28th, 2021 and the January 14th, 2022 Securities Litigation Committee meetings. We then moved on to new business, and committee staff Sarah Sauter provided an overview of the Securities Litigation Committee work plan. By motion, it was moved and approved by the committee members that the committee recommended the board approve the Securities Litigation Committee work plan. Mr. Chairman, I have motion to that regard.
Go ahead.
I move that the State Employees Retirement Board accept the recommendation of the Securities Litigation Committee to approve the 2022 Securities Litigation Committee work plan as set forth in the attachment. Is there any? Go ahead, sir.
It's been properly second.
Second.
I hear a second. Anyone on the question? Seeing none, roll call, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
Unanimous vote.
Thank you very much. Greg?
Okay, that concluded our work for the day on the 22nd, or whatever date that was, 24th. And the meeting was adjourned at 2:33 p.m. I'd like to note, Mr. Chairman, that today is committee staff Sarah Souders' last day at SERS. She will be taking on new challenges over at the Department of Community and Economic Development, I believe, and we would like to wish her well on the next phase of her career. And that concludes my report, Mr. Chairman.
Okay, thank you. Good luck with those ventures. Okay, with that concludes the committee report. Under our agenda, there is no old business. We have a new item that was placed upon the agenda under new business, the Russia-related investments discussion. Obviously, this has been a very high priority issue in the news, but also within the investment and pension world. You got a copy of the letter from the governor yesterday from Executive Director Turda explaining where he was at and recommending that we take action. PCERS has also adopted a resolution to approve that, and our own Treasurer Garrity, if you will, has been in the forefront with taking some action in her office as far as that goes. So with that, I'll hand it over to Executive Director Turda. Joe, if you want to bring any background up for us for discussion.
Yeah, this is a very hot topic in the public domain. A lot of public pension systems are making moves to divest. Some of them very quickly. We've been working with our investment professionals here at the state retirement system, and I have been in contact with other public pension plans. There's been some engagement with board members and designees regarding this matter. We thought it necessary and prudent to include it on the agenda, and we scheduled as much time as is necessary for the board to do so. And we welcome questions from the board members and designees. We have Callan on hand, and we have our investment professionals from our investment office to field your questions regarding these financial matters.
Well, let us do this first. Jim Nolan, if you could give the spin from the investment office. I see there's a chart up here as far as our market value in those areas. So, Jim, if you could just explain what exactly we're looking at here.
Yes, thanks, Chairman Philman. Yes, we prepared a slide for the board here to take a look. It's on the live stream as well. As the chairman indicated, we have some exposure, very small amount of exposure. It was less than 5 basis points of the total trust recently. Unfortunately, given the illiquidity, essentially the Russian market's been closed all week. There is no trading going on. If you log into your brokerage account, you'll see a message that no orders are being taken for those securities. However, our managers continue to do valuation. The numbers that are on the slide showing $19 million approximately in public equity That is closer to 5.5 to 6 million now, sadly, because of the decline in the ruble value as well as the underlying securities. The private equity piece that we have, Chairman Philman, is an illiquid investment that has been in our legacy portfolio for several years for sale. There hasn't been any interest in it at the current time, so that will be there for a little bit longer. But all our managers are working with the index providers. As we know, MSCI and FTSE Russell have both indicated they're removing Russian exposure from the emerging market indexes. We have an emerging market index fund ourselves, and that will be adjusted accordingly as they mimic that index. The other managers that are involved certainly will work to this board's direction to the best of their ability to do whatever they are asked, but again, they've all signed on and remain as fiduciaries, and will do what's in the best interest, but certainly will follow direction from this board. Back to you, Chairman Philman. Thanks.
Okay, let me do this. Who's here from Cowen? Tom Schindler?
Yes, hi, Chairman Philman. I'm on.
Yeah, if you could just give an overview from your experience, and then I'd ask the treasurer to give experience in her department, her office, and then we'll open up for some discussion. So, Tom, go ahead.
Sure. Thank you, Chairman Philman. So, from a client perspective, we do have our client base in general evaluating exposure that they have across both public markets, so equities and fixed income, as well as potential private markets exposure to Russia. And then also, in some cases, we do have public funds that have taken action, and that's action that's been made public in certain cases where they've made a board decision to divest from Russian securities. And I do want to add color on the markets that I think will be helpful for the board just to understand the dynamics. So the Russian local market has been closed all week for equities. The ADR and GDR markets, so those are American Depository Receipt and Global Depository Receipt markets, they're now also closed to trading of these securities. Russian brokers are not taking orders to sell from foreign investors. Clearstream, which is one of the largest clearing houses in Europe, is not settling or clearing trades for these Russian securities. Today, it was just announced that the Moscow Exchange, so that covers Russian local markets, has been removed from the world group of exchanges. So they've been removed as of today. And then finally, MSCI, they were the first, but others have done this as well. They're one of the largest index providers. They're the benchmark for both your passive manager in international as well as active managers. They removed Russia from the index. It's been deemed uninvestable after consultation with market participants, including asset owners, including Cowen clients, asset managers, and other participants in the market. So we're going to remove Russian securities as of next week, March 9th, at a very low valuation. So it's a fraction of a percent for each share value, effectively writing these down to de minimis values. And so then there'll be the question of the ability to sell securities that have been removed from the index. So that's a lot of information that I just went through. The summary, though, is that these markets are now locked up. A lot of investors want to get out, but the ability to do so right now is it's uninvestable right now, so you cannot sell today.
Okay, thank you, Tom. Any questions for Tom? Senator Sano, and then Paul Schrummel. It's Representative Schrummel.
Who's first?
Senator Sano.
Oh, I'm sorry. Okay. I guess my questions were really answered with the presentations. Callan, you can't sell the stuff and you can't get paid. That's the issue. There was an interesting article in the Wall Street Journal yesterday. I don't know if anybody saw it on this topic that, we really can't do that. But what was the total loss in value? I missed that. Is our $20 million investment down to $5 million right now? And it's probably actually less than that. Is that correct?
Yeah, you're just getting updates on that, Senator DeSanto, from the market, from the managers themselves. That's what they estimate, because as you have indicated, a lot of the damage, including first and foremost the significant decline in the value of the currency. Then you adjust the level of disinterest for the securities, and you have a pretty ugly picture. But fortunately for us, we basically have exposure based on the indices that we follow. They're mimicked.
I got it. I got it, Jim. I get it. Yeah. So, I know there's a lot of political noise around this, and, obviously nobody supports Russia, but, if we sell these things it's a loss to our plan holders, and that's where our fiduciary duty is, in my opinion. And in fact, I also think that when these things are sold, because they'll eventually become sellable again at some point, the people that are going to benefit from this are the Russian businessmen, the oligarchs or whatever you call them. They're going to be the ones buying it up and making huge profits. So I understand the political motivation behind this, but, my perspective, the reality of it is, we probably shouldn't disinvest this stuff. It's very small, and hope that we get some recovery for our plan holders in the future. And that's what our mission is. So just my perspective.
Okay. Representative Semmel.
Yeah, thank you, Mr. Chair. This is an issue I've actually found more difficult than anything else in my short time on the board. As my fellow board members will know, I always look at our fiduciary responsibility to the annuitants and see that as really our primarily and sole responsibility. That is our fiduciary responsibility. And looking through our own bylaws and our mandate, that is our responsibility, is to maximize return for the value of the annuitants. So, I find Russia's actions deplorable, and I believe that there is a sort of a national effort to even at risk to our own economic benefit to divest of these assets. I think that would be appropriate, but I think to do so, I believe that we should ask the legislature and the governor for the direction to do so. They're the ones who grant us the mandate to manage the funds to begin with. The governor, and I believe the majority leaders of the House and Senate, and probably the minority leaders as well, I think are all inclined to make such an action with regard to assets that are held by the state anyway. And as Callan reported, I think it's going to be difficult to divest ourselves of the assets rapidly anyway, since the exchanges are closed. So, I believe that it would be, given the totality of the situation in this case, I think it would be appropriate to divest. I just would rather do that by first asking that the legislature and the governor directs us to do so by mandate. I think that keeps us solidly in line with by resolution, keeps us solidly in line with our mandate without exceeding that mandate to achieve other objectives.
Thank you. And for a bit of information, the PCERS was a resolution that they had passed. Before I take any other questions from the rest of the board, Treasurer Garrity, you're close to the situation. Can you give a report on that?
Sure, Mr. Chair, I'd be happy to. So PA Treasury does direct investments of about $40 billion, so it averages between $37 and $40 billion in our portfolio. And the amount of Russian holdings that we had were about $2.9 million. So to put that in perspective, it's less than 0.01% of our portfolio. However, it is $2.9 million and every dollar matters. So it was invested in the All Country World Index, and we were able to get out of 28 of 31 of the Russian companies, and they were mainly energy companies, some banks, and a couple of telecommunications. So what we did was obviously rebalanced and then got into the ACWI, so put it into the rest of the index. So what's with a balance of $184,000, that's 3 Russian companies. They are in American depository receipts, which have been halted from trading as part of the sanctions, but at the same time, it's important to know that that means the sanctions are working because they're in place to prevent companies from accessing those funds and supporting Russia. So the reason we were able to do it quickly is I made the decision last week. So the minute Russia invaded, it was a 2-minute conversation. We said, get out. So if I would have waited, ours would probably be sitting there right now as well for some point in time at least. So that's where we stand, unless anybody has any questions.
Any questions for the treasurer? Joe Torta, I can't see the hands. I see it. Dan Frankel's got his hand up. But if you could take over for getting a list of folks. So Dan, I'll open the floor to you.
Well, thanks, Mr. Chairman. And I appreciate the comments of my colleagues with respect to our fiduciary responsibilities, but I think an argument can be made that this is consistent with our fiduciary responsibilities. Clearly, this unprovoked, unjustified invasion and the threat of nuclear arms is a much more global threat to our whole pension system. So I think that any effort that we can do is, and this is, to be quite honest, de minimis, but it is more symbolic and I think consistent where other pension systems are going, where we're going as a country in terms of sanctions. I think there's an argument to be said that this is consistent with our fiduciary responsibility in protecting the assets of our pension system as the world faces this kind of global crisis that threatens our investments. So I would certainly support a motion to divest. Thanks.
All right. And I see Alan Flanagan's hand is up.
Yes, and my question's for Callan, and perhaps anybody else who may have knowledge of this topic. But I'm interested to know. So, when we're purchasing in foreign markets, we're purchasing most oftenly American depository receipts, which, my understanding is that it's an instrument issued by the American financial firm, and then they go and procure the share in the Russian market, and they kind of hold it on our behalf. First of all, is that a correct characterization of how that market works? And then secondarily, the question is really, what's the legal responsibility of the entity through which we purchase the ADR to actually be able to deliver those shares? Or would there have been a carve out within those contracts that says in the event the exchange through which we're purchasing shuts down and the security is undeliverable, we no longer have a obligation to fulfill the ADR that we've issued? Could you kind of briefly, to the extent you can, walk me through that and help understand exactly how that market works?
So Alan, I can give you not the legal perspective, from an investment perspective, and SIRS.io could give you the line by line in executive session by manager of the exposure. So it does include ADR/GDR, global depository receipt exposure, as well as local market exposure. So it's not just depository receipts. And then, yes, there is foreign bank certification of depository receipts of the local shares. I can't comment beyond that from a legal perspective, but it's important to understand that the exposure is not just in depository receipts, and these are all, also it's important to understand, these are all in commingled funds. So it's not in a separately managed account. It's in a commingled investment fund structure.
So just a quick follow-up, would the bank that issued the depository receipt have any obligation to continue to provide access and liquidity to that product in the situation that we're in, or is it for all intents and purposes the exact same as if we owned direct shares from the Russian exchanges?
Well, I can say that they're halting trading. That's all I can.
Okay.
That's the comment I can give. So both of those markets, they're halting trading, so you're not able to trade the ADRs or the GDRs. But beyond that, that's the extent of what I can give.
Okay, not a problem. Thanks, Tom.
I see Treasurer Garrity has her hand up.
Yeah, I just also wanted to mention, I know that there are at least 19 other states that are in the process of divesting or looking at, looking at legislation. I think that list is probably more than 19, in addition to Pennsylvania at the moment, because that was 2 days old. Also, there are a number of co-sponsor memos out there, so I think the legislature will be doing something. And it's also supported by the governor, and I want to thank the governor for sending his letter. The other thing, I think we should consider whether SIRS wants to do business in countries where their standing as an international investor will be subordinated to national interest of the country. So the Russian central bank had already halted cash payments to international investors, and there's a history of other countries asserting their independence against international investors. So I think going forward, it's probably a conversation at a later date that we should have.
Okay, thank you. Representative Schemmel?
Thank you, Mr. Chair. Just to be clear, I don't think that SIRS should be investing in Russia, but I do think that there's a matter of form as to how we go about divesting of an asset that might have a negative economic impact on us. And this is a case where I think our mandate from the legislature is very clear. I think we need to go to the legislature and say, give us direction, because we want to do something that is maybe not in the best financial interest, but we think that there are overriding interests. As the treasurer stated, the governor has made clear his intent. I believe the legislature is very likely to do that. The legislature will be meeting soon in a couple of weeks. We're not likely to be able to divest ourselves before that time anyway. So I believe that we should divest ourselves, but I think we should do this in the right way, which is first to get directions from the legislature and the governor, because otherwise we're taking actions which I think exceed our mandate. And I think that is important, more than just symbolically important. I think it's very important. Now that said, there might be a financial reason why we would want to divest, aside from the policy reason, and that would be my question for Callahan. Is there a financial reason? Because if there is, then this is a simple issue. We simply divest because there's a financial reason to do so that's in the best interest of the fund itself. Otherwise, I'm going to make the motion that we instead ask the legislature and the governor to give us direction to divest and receive it, and then we can anticipate coming back in a special meeting to quickly pass the divestment resolution. Thank you.
And Senator DeSanto. You may be on mute, Senator.
I apologize. I'm trying to be mindful of that. I think Paul did a good job summing up his position on that. And I just wanted to be clear that, I support divestiture. I just don't know if it's, doable at this time, and, trying to understand what the real impact of divesting our Russia-related public equity holdings on Russia. And, we keep dancing around, the politics of this, and I think we should probably also, not at this time, but in the future, have a discussion around the ESG investing strategy as it relates to climate change, when you have our governor having an actual war on our fossil fuels, our oil and gas industry, yet we are, importing 10,000 gallons or 10 million barrels of oil a day from Russia. So this is a broader discussion, I think, on how we should be acting, and keep politics out of this, and keep in mind that our duty is to protect our fiduciaries. So just wanted to clarify my position on that. Thank you.
Mr. Chairman, I don't see that any other participating attendees have their hands up.
Okay, thank you. Let me say this. I mean, I think that the timeliness of this is necessary. I think the day-to-day challenges that the Ukrainian folks are having with Russia's advances is devastating. I too agree that we should not be in a political position here. That's true. That is for the governor and the legislature and elected officials to take that position. But I think based on the fact, as the treasurer has indicated, 19 plus states have already adopted some sort of resolution. Pacers has already. In the governor's letter, he's indicating that. And I think that this is not I'd say a general kind of, let's say divestment out of, for whatever reasons, and you can list the reasons. This is really, in a really sense, a life and death kind of issue when it comes to the Ukraine. And it seems like whatever the president and or the legislature have taken as far as sanctions has really hit home, not only for the oligarchy in Russia, but unfortunately for the middle and lower class that are getting hit with increases in food prices. Banks are closed. Interest rates are going crazy. They're just in a real turmoil out there. And really that's the purpose, is to put the pressure on them, to put the pressure on President Putin that they back off on some of this. I'm not sure if it's really because of that that 40-mile long convoy has suddenly slowed down. I understand last night they were actually bombing a nuclear power plant, one of the largest ones in the world. That has backed off too, I understand. And there have been some discussions going on. But that being said, I am comfortable taking a position that we do go into the divestment of this issue here without getting as much as we can into the political arena. Yes, Senator and Representative, I agree that's your forte as we go forward with those kinds of things. But I think we should at least, and keep in mind, our members are also watching this, and I don't think they're far off from the fact that we should not be investing in this. I am cognizant of the issue, of the money issue, but I think this is a very difficult situation, and any help we can give the Ukrainian people, if this helps, I'm on board. I understand there's two hands up, Executive Director Torre.
Yes, Treasurer Garrity and then Senator DeSanto.
Yeah, I just want to mention, this is an invasion of a sovereign nation. It's truly a national security issue. These funds are going to depart the Russian market on their own, and actually, if we don't get out as soon as we can, there'll be even less left. So I don't advocate at all waiting for the legislature. I agree with the chair. Thank you.
Thank you.
Senator DeSanto.
Ready for me? Okay. I just have a simple question for Callahan. What's the actual impact of divesting our Russia public equities on Russia?
So this is a secondary market that's closed. It's not about, you're not purchasing in, let's say, an initial public offering, where if you purchase, the capital goes directly to the company. This is secondary market trading, where if an investor like CSRS, through its commingled funds, it's not direct trading. Through its commingled, if, let's say BlackRock, this is a passive manager. They sell, they have to find a buyer on the other side. It's not actually directly with the entity that issued the stock. So in that sense, the impact is not direct. It's in the secondary market. There is an indirect effect that is meaningful longer term, where it raises the cost of capital, the ability to raise capital for those companies if there's a widespread divestment initiative that drives down value. That's where there's impact. But the direct impact, there is not one in terms of exchanging in the secondary market. Is that
So
the
it
question?
sounds as if our public equities exposure is going to be liquidated anyway as a result of being Russia taking out of the indexes, right?
It is correct. That is correct in the passive mandate. So you have, SIRS has passive exposure, so through an index fund, as well as active management exposure. In the passive, the manager will no longer be managing to a benchmark that includes Russia. So there's going to be these positions as of next week where they'll be on the books as positions, but how do you sell them? So there's that question, but they won't be investing in the future. They've already stopped buying. That happened at the end of February.
Right.
For active managers, Russia will no longer be in their index. So then it is a question of manager by manager how they handle that, regardless of what any asset owner does. It's no longer in their index. I can say from exchanges in the last day after this was announced with managers, one manager has said, this is no longer going to be in our index. We're going to divest when we can, but we don't intend to purchase in the future in this market, which will no longer be on our index.
Right. So that was my last point. I mean, moving forward, nobody is going to be investing in Russia.
I think that's generally fair. You could have certain managers where it's called out of index, where Russia's no longer in their index and they want to dabble in it because they see value, let's say. But generally speaking, that's correct, that it's not going to be in their index. And if the guidelines say you have to only invest in the countries in your index, then they definitely can.
Right. Okay. Thank you.
Yes, and before Representative Schemmel chimes in, I do want to point out that for the chairman, Mr. Feldman, that the draft motion that was provided does address divesting in a fiducially prudent manner and within a reasonable time frame. So with that being said, Representative Schemmel?
Well, let me, before you talk, Joe, get ready to put that up when we get done our discussions, okay?
Excuse me?
The motion that you talked about?
Yes, I'll have that done.
After we're done our discussions.
Okay.
Representative, go ahead.
Yeah, thank you, Chair. So my question for Callahan is, all things being equal, if there were not, moral implications to, Russia's actions, which I personally believe there are, but if there were not, would you still be advising us to divest ourselves of these assets? Is there financial justification to do this regardless of what Russia has done?
So we can't opine on divesting in a specific set of securities from a fiduciary perspective. It's not within our scope and our expertise, where like an asset manager where they're owning these securities and they say from an investment perspective we no longer want to own these, forgetting all of the other implications that are very very close to everyone's hearts. From a fiduciary perspective, the managers could say, based on what I know today, I do or do not want to own this Russian security. From a portfolio perspective, we can say this is de minimis in terms of the impact. It's a tiny portion of the portfolio. But you have to understand that these securities have declined in value. So the markets are down in general this year, but specifically Russia is down much more than the overall market. We actually can't price it today because the markets are closed, but we know that they're much lower than they were. I'll give you an example. So at the end of December, this exposure was higher. I believe it was 56 million. Okay, so then it was down by the end of February, and then it's down further from there. So what the recovery ends up being when investors that want to sell can sell is unclear. There's really no precedent for this elimination, this extremely rapid elimination from the index. We can't say today what the recovery value will be.
Okay. So, Mr. Chair, I think I'm much more comfortable with the proposed motion. I haven't seen the language. If it makes some reference to the fact that there are financial reasons as well as reasons of national security to make this divestment. I understand that is a subjective scale in terms of financial, whether this would be wise or not. It's de minimis. I think there's probably ample justification to say that there are financial reasons as well as others, and I would be comfortable if the motion made reference to those as well. I think that keeps us within our mandate. Thank you.
Thank you, Representative. I see Dan Frankel.
I appreciate Representative Schemmel's green tag. This invasion, the threat of nuclear weapons, I asked this to Callan, isn't that a threat to a stable investing environment? And I think because of that, this kind of action makes enormous sense, particularly when we're acting in concert with other pension systems across not just this country, but probably across the world, that this is an action to kind of protect or do whatever we can, even in a de minimis way, to protect a stable investing environment, which has been completely destabilized by these unjustified actions by the Russians.
Yes, you could say that's a separate argument. So one argument is the more narrow argument on the individual securities. You can make the broader argument, which is, I think, is what you're saying, Representative Frankel, where taking all these actions to try and deter Russia and slow the invasion, stop the invasion, where if it extends and escalates, there's broader ramifications for securities markets. I think that's a different argument and one that you can make.
Sorry, thanks very much.
Okay. This was something, there has been discussions obviously before today. Executive Director Torta, along with the executive staff, had come up with this compromise, if you will, and I think it reflects actually what we've been talking about here today. So, Joe, is there any comments about this at this point?
We felt that this was consistent with what public pension plans were doing. It's consistent with the direction given to us by the governor. It's concise, it's direct, but it gives us some flexibility and allows us to act prudently and in a fiduciary manner.
Okay, so I understand you're saying it for the first time. And I see, Joe, I see some hands going up.
Mary Soderberg?
Thank you. I just want to say that I support the resolution and I applaud the very decisive, quick actions of our state treasurer. Thank you. And I appreciate the discussion we've had. This has been it's helped me to think through the whole issue. So thank you all.
Thank you. Anybody else, Joe?
I don't see any other hands, Mr. Chairman.
Okay. Unless anyone has any comments on the motion as presented, I will enter that into to the discussion as far as that goes. So with that, I move that in response to Russia's invasion of Ukraine, the SIRS administrative staff, investment office staff, and the board's investment consultants are to begin immediately to take all actions necessary to divest SIRS of all Russia-related and Belarus-related assets and investments held by SIRS in a fiduciarily prudent manner and within a reasonable time. And further, the administration and investment office staff of SIRS shall direct the investment managers, consultants, and other investment partners of SIRS to seek making further Russia-related and Belarus-related investments until such time as the board, after receiving the advice of internal staff and outside investment consultants and advisors, concludes that it's fiduciarily prudent to again do so. I so move that. Do I hear a second?
I'll second.
I hear a second. Anyone on the question? Joe, someone's got their hand up.
Representative Schemmel.
Thank you. Mr. Chair, I can support the motion. I think it's broad. I do have, because it says in response to the Russian invasion, that could be anything, as I said. I think as long as we have some financial tie, I think Callahan has given that to us, then this is fine. I do have a question. It includes Belarus. which is an independent country of Russia. Our discussion's been about Russia. Do we have assets in Belarus? Just out of curiosity.
Jim, can you answer that, or Callan? Tom? They're not much of a big player anyway.
Right.
The answer is no.
No, we don't? Is that the
We do
answer?
not.
Okay. Does that answer your question, Representative?
It does. Yeah, it does. Thank you.
Okay. Anyone else on the question? Anyone else on the question? Seeing none, roll call vote, please.
Senator DeSanto.
Aye.
Chairman Philman.
Aye.
Representative Frankel.
Aye.
Treasurer Garrity.
Aye.
Mr. Lindsay.
Aye.
Mr. Jordan.
Aye.
Representative Schemmel.
Aye.
Ms. Soderberg.
Aye.
Secretary Thal.
Aye.
Mr. Flanagan.
Aye.
It's a unanimous vote, Mr. Chairman.
Well, thank you very much, everybody, not only with your comments, but supporting this resolution. It was the right thing to do, and I'm glad we can join some of the other funds that have already done this. And I think timeliness is very important. So, again, for the last minute piece here, I appreciate that work that you've done. Okay, that concludes our new business agenda piece. Number 8, we have a special presentation, Board Education, Private Markets Distribution Waterfall Overview. Jim, I guess you're on board.
Yes, thanks, Chairman. Yeah, we've asked one of our investment consultants who happened to be involved with ILPA in a prior life, and actually we learned that he was acting in an educational capacity on explaining the complexity of private market and how the economics work and flow through, and how managers aren't able to participate in profit sharing, also known as carried interest, until all capital, fees, expenses, and otherwise are returned to LPs such as ourselves. So that's something that's not well understood, although our returns are all published net of all those transactions. It's just not clear in the reporting because of how long the private market partnerships take until they wind down, upwards of 15 years. So with that said, I had board members requesting more clarity on the whole topic of cash in the form of contributions to the investments, expenses, and how those are returned to investors in the form of essentially capping the general partner's profits until we are made whole and we receive our preferred return in most cases. So with that, I'm asking Mike Elio if he would provide us with his educational excellence on this topic. Go ahead, Mike.
Yep. Thanks, Jim. Hopefully everyone can hear me. Good morning, everyone. So I hope to make this more of an interesting discussion on Distribution Waterfall as opposed to a march through a very complicated deck. So I promise in advance I will not read every bullet and go through every slide. But with that, if we could go to slide 5 on the overview page, I think it's important for us to just, slide 5, the one before that. Slide 5. Well, anyway, while she's getting that slide up, one thing that we need to know is kind of make sure that we're all on the same page from a definition standpoint. We all know about limited partnership agreements. Those are the 100+ page legal documents that you sign as a limited partner investing into a fund. And of course, the general partner is the one managing that fund on your behalf. On a side note, the side letter that you're so familiar with is the letter that PA SIRS sends to the GP asking for additional requests outside of that agreement, usually related to things like transparency and data fields and things like that. Now, within this partnership agreement, one of the most important parts to review is the distribution waterfall. The distribution waterfall really is a term that applies to any money coming back out from the fund to the investors. How is that money handled? And as you know, in any document that's 100 pages long, it can be quite opaque. It can be extremely complex because lawyers are not paid to make things simple. And so there are a lot of nuances in the words where some of the headline names can be the same, but if you dig down into the terminology itself, it can actually impact the return to the investor. So we need to be aware of what those terms are and what the implications are. And I will say these distributions can vary depending on this methodology. What our job is, and your job as the end LP, is to make sure we review that terminology and modify it where possible to make sure that the total return to the LP can be as high as possible. And I think it's also good for us to understand what the components are within this waterfall of where the capital goes in and how the capital comes back out. So just at a short example, capital is contributed into the fund. Now remember, you're a limited partner committing usually anywhere from 90 to 99% of the capital into a fund. The GP has to contribute their share as well. So when that 80-20 profit share is calculated, the actual amount of cash they get can vary. So it's important for us to understand how that works. If we go to the next slide, usually a picture is worth 1,000 words. I know it's really small on your screen, but I think if all the money coming out is the blue circle at the top, the money going to the left is your money, it goes to the investors. The money on the right is what goes to the general partner for managing the fund. In this particular example, the GP invested 1% of the fund and the investors invested 99%. So what you can see here is effectively the flow of the waterfall as it falls into certain buckets in the distribution process. Now, I think before we go through what they are in the order that they're in, and by the way, they're in this order just from a typical order, but it makes sense for us to know what we're talking about here. So return of capital, when you invest in a fund, it's called your capital contribution, and you contribute cash for multiple reasons, usually for investments in underlying portfolio companies, or for fees, or for expenses of creating and managing the partnership. So that's how the money goes in. But when it comes back, one of the first categories is return of capital. And return of capital can have a number of different definitions. It can include the cost of investments, the expenses, as well as the fees that go into investing in those portfolio companies. So that's an important distinction, so that I know we're very focused on the fees paid on the way out, but we don't actually track or offset the fees out with all the fees coming back as the distribution and the returns come through the portfolio. Now remember, your portfolio has generated over $1 billion a year for the last few years, so clearly a large percentage of that capital is return of capital and return of fees. So something to think about. The next category is the preferred return. And I'll go into these in detail, but I just wanted to make sure we're on the same page at the high level. Preferred return is you've probably heard us say, it has an 8% pref or a 6% hurdle. This is the guaranteed return on the capital that you've contributed to the general partner. So this is effectively the floor of return that you told the GP that you would like. And then, of course, everything over that is the carried interest return that you want over and above that. That's that 80-20 split. How you get to that full 80-20 once you've hit the preferred return is where the catch-up comes in. Some partnerships, the GP can only take carry over the preferred return. That's actually quite rare. So what happens is, as more capital comes in, once you've hit your pref, it will be split by you and the GP until they catch up that 20% that they didn't collect because you got all of the preferred and they didn't get anything. And then, of course, at the end, the carried interest, that 80-20 split that you're also familiar with. Obviously, in the venture side, that number could be a lot higher. So hopefully, that's the four main categories of how the cash comes in. Now, of course, the order of that and the definitions of each one of those really matter. So if we go to the next slide, there are a few different details. Oh, the initial split. So thank you for managing this very small font on this deck. The initial split is really where some of the changes can happen. Sometimes the initial cash that comes through is split by ownership percentage first. So if the GP is a 5% investor in the fund and you're a 95% investor in the fund, it would get split initially that way, and then it would go through the waterfall process. That all depends on where the order is. I'd say that's less common, but it's something that can materially impact your return in a fund. So if we go to the next slide, I won't go through all the slides on this page, but what you can really see is, in this particular example, the GP was a 5% share of the fund, and on the left-hand side, they get to take their 5% back first, and on the right-hand side, everybody gets to be treated the same as a limited partner, and you get your return of capital back, then your fees, and then your carry. So as you can see in this example, $200 million comes back, the GP takes their 5%, which is $10 million, the investor gets his $95 million back of cost within that investment, and so on. So you can see that in the left-hand example, since the GP takes his piece first, the LP actually gets less money up front. But if you're treated equally on the right-hand side, you can see that you get $2 million, but pennies make dollars in this asset class. So it's a significant difference between the GP getting 28% of the total profit and him getting 24% of the profit. So I think this initial split, it's a small nuance, but there alone, even though you say it's an 8% pref, it's a 80-20 split, it can have an impact on returns. But I will mention that each time you'll notice the fees come back. So the fees on that investment, which just for this example, we made relatively substantial for a $100 million investment. But it's good for us to show that capital comes back and the fees come back as part of this transaction. So return of capital, if you look at this waterfall, is a big chunk of the capital that comes back with every distribution. And if you go to the next slide, it's important to note the definition of return of capital in all of these legal documents really do have a significant impact on the performance as well. Because when you think about it, and we have them listed here in the orange set of bullets, the definition of return of capital could be anything from commitments, which is rare, to total contributions, to contributions or just invested capital into the portfolio companies. So as you can tell, each number gets smaller and smaller towards the LP's benefit so that it leaves more money available for the 80-20 split later on. So this is where fee and expenses to be included in return of capital are an important component in deciding in the waterfall that those come back first. It is very common, I'll get into the details later, it is more common to see that, but it's important to note if there are any variations from this as we go through the process. Another thing that is important to note is some waterfalls include a return of capital for all investments, regardless of realization status. In other words, LPs want all their capital back before the GP can take anything. So that is more of what's known as the European Waterfall, and I'll get that into a minute. That is very LP friendly. So because of the definition of return of capital, they may actually be entitled to carry sooner. On occasion, if they get paid carry sooner, it means that at the end of the fund's life, when you do the math, because you have to recalculate it every time to make sure that they got their 80-20 split overall, they could owe money back to the partnership, which would then be redistributed back to the LPs. That's known as a clawback. So there could be implications on the clawback side if this definition is too GP friendly, as we say. So that's another issue that we should be considering in the process. So if you look at the next slide, a perfect example of return of capital. And again, remember, you want to invest your capital and get as much of it back as quickly as possible so you can redeploy it with other managers making investments on your behalf. So here's another distribution waterfall where you can see the $200 million and how it flows down to come back into your pockets. I won't go through each line item, but you can see, depending on 3 different definitions of return of capital and the fees related to it, you would get more fee revenue back in definition number 3 because the fees allocated there would be the larger amount. So that in the interim, you get more money back of your contribution, and the net profits would be back-ended as some of those other portfolio companies are realized. So I know I'm going through this relatively quickly, and there's a lot there, but willing to take questions as we go or at the end. So return of capital, if you remember from that first waterfall chart, was the first box and the bolus of capital that you'll get back. On the next slide, we talk about preferred return. So a preferred return is important. It's tied to the return of capital, but how it's defined, this is on the next slide. Sorry, Catherine. Yep. So how it's defined really has an impact, again, on flows and returns. So again, there's both what is the number, the hurdle. Is it 6%, which some of the private credit or private debt tend to have a lower hurdle. Private equity is about 8%, though the GPs are trying to push for either no hurdle or a lower hurdle over time. I think higher interest rates will make that harder for them to do. As a side note, some of them actually use simple interest. Some secondary funds do that, or compounded interest, which is more important, which is what obviously an LP would look for. Some can be a soft hurdle, like the example I mentioned before. That's when you say, okay, I want 8% back on my money at a minimum, and then we can always do a GP catch-up to make sure the 80-20 split is there, but I always want that 8% as a floor. That's called a soft hurdle. The other is a hard hurdle, where I want my 8% no matter what, and we will split everything over and above that. I will say the hard hurdle is a spectacular benefit to LPs, but as you can imagine, very rare and less common. The right-hand side is an important thing to note. What is that 8% based on? And that is a definition that is also important because it can make that preferred return number larger or smaller, right? Is it all capital contributions to the fund? Is it capital contributions for investments and fees, and so on? Depending on the definition, obviously, the more that's included in it, the return amount number is a lot higher. So that's an important thing to note. And so the one thing I will add to this particular slide is there is an impact that we've had over the last couple of years as we've all heard about GPs using lines of credit, right? A line of credit means they're not calling the money from you, but they're still making the investment on your behalf, using your full faith and credit, by the way, to get those loans on behalf of the fund. What that does mean, though, is that regardless of the definition of base, if they have not called money from you, that preferred return does not start to tick. So that means that you are not getting the benefit of having that capital, one, invested out the door to create NAV, even though you have exposure indirectly that's levered. But that preferred return number is, that clock is not ticking. So it means that you don't start building up a pref, and the GP themselves, since the pref number would be smaller, get closer to that bottom box which is the capital gain or carry number on their behalf. So that's an important thing to note. The next slide is a full detail of that. I won't walk through it. The numbers are too detailed and too small to even bother. But if we skip ahead to the catch-up and carried interest, I think this is probably the one that's on the next slide, Catherine. Catch-up and carried interest. This really comes into play assuming profits are generated from these investments, right? This is where the catch-up distribution comes in. So it's important that we don't want GPs to, look, we want them motivated to be there to manage your portfolio. So the trick is to slow the pace of them getting any money, right? So this is where a 50-50 catch-up or an 80-20 catch-up or 100% catch-up. 100% catch-up is more in the favor of the GP. 80-20 is most common. We want to keep that number as balanced as possible, though clearly there needs to be some incentive for the GP to get some capital. And of course, carried interest as well. You're familiar with the 80-20. Venture funds, as you know, can be up to 30. We've looked at some private equity funds that have 25%. That's an important number to look at because in full dollars, that's the largest expense that you will have, particularly with your successful GPs. I know it sounds horrible. You almost want to pay as much in carried dollars as you possibly can, but you want to pay it as the smallest percentage that you possibly can. So in other words, 20% carry to the GP is great. Obviously, anything less than that tends to be more private credit or private debt focused. But the more successful GPs, even if they all had the same 80-20% split, you're paying more dollars in carry to the successful ones. And the last thing maybe on the next slide I'll mention on slide 14 is clawbacks. Excess distributions can cause a clawback. And so this, again, as I mentioned before, will be when carry is paid early and the catch-up distribution could be in the GP's favor. So what might happen is they get ahead of their skis a bit in collecting carry. So technically a clawback provision doesn't actually kick in until the fund is finalized and the full carry numbers are calculated. What's happened more recently is interim calculations are happening so that people can check to make sure that excess carry is not being paid to the GP on an interim basis, and that there's more of a balance when the cash flows are coming out of the partnership. Most GPs are very sensitive to the clawback situation, so they don't want to get in that position. Because if you look at the next page, the official clawback is not paid till the end of the fund. And if there is one, you actually have to go to the underlying GPs within the manager to get that money back. Now, of course, this creates a whole bunch of issues. For the lawyers on the phone, this is where you go, okay, well, who's liable for that if you owe us money? Is it the fund? Is it the GP? Is it the individual partners? Is it joint? Is it several? Is it pre-tax? Is it post-tax? A lot of GPs want this post-tax because when they got it, they pay taxes on it. It just gets to be an ugly situation. So LPs are pushing for more interim calculations so that those aren't paid. And then, of course, they're also looking to make sure that interim or European waterfalls are used as opposed to the American waterfall. If you go to the next slide, ILPA, of course, I have to give a shout out to ILPA, of course. They have a lot of best practices and terms on this very topic. I won't go through all of it, but they have some best practices to avoid clawback situations. Obviously, one is to use the all contributions plus preferred return to LPs first. That's known as the European waterfall. So the LPs, regardless of what the sale is coming from, LPs get all their money back before the GP can take everything. This avoids a clawback. If you have to do the deal-by-deal structure, which is known as the American Waterfall, there are things that you can do, either have interim calculations of clawback or require escrow accounts, which are also becoming a lot more common when it comes to avoiding a clawback situation. I will say it's rare that it happens, but we always have to be prepared for the worst case scenario. So I think with that, maybe I'll jump ahead. The next slide is just a definition of American versus European waterfall. And if you jump ahead to the next slide and the next one, because I just think it's just easier to look at a picture. And so you see that original waterfall chart that we had at the beginning, and you can see that the left-hand side, deal by deal, is the American waterfall. The right-hand side is the European waterfall. So you can see at the end of the day, the amount of cash coming on the right-hand side to the limited partners is significantly higher than on the left-hand side. So again, it's about getting your cash back that you've given to the GP, and the definitions of each of those, even though on paper the terms may look the same, it can have a pretty impactful weighting into the return that you receive from these GPs. So with that, I think I'll go to just a few other alignment topics on slide 21. I won't go through this one, but this has something you need to think about. Management fee waivers. You can read the slide. That's really where you're paying the management fee. The GP is allowed to waive their fee and use that as their contribution. Remember early on I said that a GP can commit 1% to 5% of the fund's capital. Sometimes they just don't have that money, particularly some of these smaller buyout funds. And so they waive their fee and use that to contribute their portion to the fund. For smaller funds, it's more acceptable because they just don't have that wealth or capital to contribute, like a huge pension fund like yourselves. The larger GPs, we look to see that being less common because they do have the capital, and we prefer they use their own capital and have skin in the game instead of using your money in a management fee process to invest in the fund. The next slide, again, I won't go through transaction. I won't go through the whole transaction fee offsets, but again, this is another example that was quite successful by ILPA during the downturn of the GFC, is really any fees that this fund generates, transaction fees, investment banking fees, board of director fees, 100% of those fees coming in should offset any management fees that you would pay as an investor. This is very important, and I think back in the day, the offset was zero. During the GFC, ILPA pushed to make that 100%. I think 100% is still market, but what we're seeing now with the very successful GPs is they're saying, well, it's 100% offset except for, and that except for list seems to be getting a little bit longer. So again, something that we should look at in the process of investing in funds. So with that, maybe just to sum up, jumping ahead to slide 26, what can we do and how do we take this information and be more impactful going forward? Really look at the terms in the funds, focus on alignment of interest, things like management fee waiver when you know the GP doesn't have any skin in the game, the GP taking their portion first before the LP. This all comes to alignment of interest. We can look at industry best practice as guidance. Of course, there is no universal answer. Certain funds, certain size funds have different variations that are market norm. Really look into the details. Waterfalls are unfortunately complex, and walking through verbally and in an Excel sheet actually should help you understand how these distributions walk through that waterfall process, and at all costs try and simplify it. You don't always have, depending on when you can get into a fund, early large investors tend to be able to make some impact. So trying to push for that either simplification or specificity, which is really the most important part. I don't know about you, but I always imagine GPs have this magical spreadsheet on their desktop that is calculating that carry number every day when they get those valuations in. I would love to see that spreadsheet as an investor to know how the money is coming back. And then, of course, at the very end of every fund life, look to have an audit of these funds so that we know that at the end of the fund's life, we now have all the information of all the money that's gone in, all the money that's come out, just to confirm that all the terms have been adhered to and that you've gotten your fair share of those investments. I will say it takes a long time for these funds to get to the end of life. As you know, can be 10, 12, 14 years. But we always have to think of the end result as we go through this process. So I'm sorry, I think I talked for like 30 minutes straight, but I tried to get through this material pretty efficiently for you all. So not sure Jim or anyone on the board has any questions, or happy to take some offline. I know it's very detailed. It's up to you.
Chairman, do you mind if
Jim,
I
go ahead and take care.
make a couple comments? Okay, good. Thank you. Mike, for the record, it was only 26 minutes, so thank you very much. You did a good job on keeping Chairman always, especially we went a little bit over on the previous one. I just want to point out that Mike has not only given us a nice overview of this fairly complex investment, which, by the way, is it worth the time? Absolutely. As you know, our returns we saw last week at the investment committee meeting for the private markets were over 50% last year, and we're nicely ahead of all benchmarks over the last 3 to 5 years. So the asset class is really working well. Stepstone's been helping us out with that. I think Mike just went through a lot of the things that you should be thinking about as we're going through the private market consultant search. What does that private market consultant do for us? Well, you just heard a lot of complexity and a lot of things that need to be watched. They help us. Our legal people are also excellent and work directly with our managers and the consultant to identify these little things that could be in there that could make a big difference at the end. So it's very important to have the right partners with us. And speaking of partners, keep in mind that these GPs do consider themselves partners of us. While Mike cautions us on all these nuances, they're not out to get us. These are just differences that have pros and cons for LPs, GPs, how they're operating the fund. They're recruiting staff just like we are. They have to be mindful of compensating newer people, retention. There's all sorts of reasons why these variations exist. The key is to be on top of them, and that's what Mike and his team do a great job with us. And finally, Mike talked quite a bit about preferred returns. I just want to make clear, from all the complexity, make clear the reason that preferred return came up so many times in Mike's conversation. Keep in mind, we make contributions, like Mike said, in the form of absolute contributions to invest, expenses, fees, the like. We get all that back, and then the preferred return has to be earned, and that's not subject to a split. We get 100% of that, 8% in Mike's example, before any profit sharing, also known as carried interest, is inured to the general partner. So very important topic. That's why you heard it so many times. Your investments are in good hands with this oversight that we have with our legal team and the consultants. So I just wanted to reiterate that. Thank you, Chairman Billman.
Okay. Any questions for either Mike or for Jim? Very good. We'll move on. Very good presentation. We'll now go into reports of executive director and agency staff. Joe Torta, you're up.
Thank you, Mr. Chairman. If you look at tab 9A in board docs, there's an administrative update. I can give you some of the highlights. I think they're highlights. Since the last full board meeting, SIRS issued 1099-R tax forms and separately annuitant statements of account. In total, this represented in excess of 283,000 documents that were mailed to our annuitants without any major problems, which is a testament to the fine work of staff across multiple business areas. In addition, the final numbers are in from last fall's direct deposit initiative. CSRS reached out to the approximately 6,700 annuitants still receiving paper checks. Our efforts resulted in over 1,200 retirees converting to direct deposit. The 20% conversion rate is by far the highest we have seen out of an individual project. On a personnel front, several things. CSRS was able to secure 12 additional permanent positions, which increased our overall complement to 246. These positions are spread across multiple business areas and are targeted to directly and indirectly support the highest level of customer service to our members and our participants. However, even with the additional positions, like virtually every other Commonwealth agency, CSRS is struggling to attract and retain employees, especially in multiple business areas. This is a serious issue. Member Services, the Bureau of Information Technology, and the Chief Counsel's Office have been hit particularly hard. For these reasons, we're taking a fresh look at the viability of some of our more involved strategic plan initiatives, and in all likelihood, we'll be moving the go-live date for the Cirrus 2.0 computer project from mid-July of this year to an undetermined date in the future. A final decision on that will be made by the end of this month. On a brighter note, I'm pleased to report that Cynthia Collins is scheduled to start at CSRS on the 21st of this month. Her title will be Director of Governance and Strategic Initiatives, and she will be dealing with the board on matters of board governance, as Chris Houston will be passing that baton to her. She will also be working in concert with the Communications and Policy Office on all legislative matters, and with Empower Retirement on strategic and high-level defined contribution and deferred compensation initiatives. I look forward to bringing her on board in support of the CSRS initiatives, the board, and to assist us in serving the members and participants. And finally, Dave Tarsi has returned as an annuitant to serve in my old capacity as the acting Deputy Executive Director for Member and Participant Services, and he's agreed to stay on until a permanent replacement is named. We hope to do so in the upcoming months. Also in Board Docs, under tab 9A, is the legislative update. There are multiple pieces of legislation in the pipeline. CSRS and PSRS testified separately on January the 20th before the House State Government Subcommittee on Public Pensions, Benefits, and Risk Management regarding these various pieces of legislation. It should be noted that our board member, Representative Schemmel, participated on the subcommittee in the hearing. The link to the full video, if you would like to watch it, of the hearing can be found in Board Docs in the library section under item B, 2022 CSRS testimony to the House. As a reminder, as members and designees of the CSRS board, you are considered to be public officials subject to annual financial disclosure requirements. You are each required to file under the Public Official and Employee Ethics Act. Governor-appointed board members have an additional filing obligation under the Governor's Code of Conduct. The filing deadline is May 1st, as a reminder, although earlier filing submissions are appreciated. You should have received an email with additional information and instructions from the HR Director, Katie Matthews, on February the 8th. Please reach out to Katie if there are any issues or if you have any questions. Also, as a reminder, the annual board retreat is scheduled for the 24th and the 25th of this month. Due to when we had to commit to the schedule, we had to make the call of a virtual meeting versus an in-person meeting. At that time, a virtual meeting was the safest option. The hope is that all future retreats will be in person, which is highly preferable. For future board meetings, I will act and CSRS staff will act at the direction of the chairman regarding the format, and we are prepared to facilitate a return to in-person meetings, a continuation of virtual meetings, or any combination of the two. And last, I just want to say that I've been the executive director for approximately 2.5 months. I really want to express my sincere thanks to the members of the board and their designees as far as how I've been treated and the engagement that I've had. And I especially want to recognize SIR's executive staff for their support. The leadership team here always has been and continues to be truly outstanding. That concludes my report, Mr. Chairman. I welcome any questions now or at any time.
Any questions for Executive Director Torta? Any questions? Okay. Thanks,
Thank you.
Joe. Good. Oh, yes. Who's got their hand up?
Representative Schemmel.
Yes, thank you, Chairman. I just wanted to say that Joe has done an exceptional job in his position and an exceptional job. So I didn't even have to line up any softball questions. I really appreciate the good job that you're doing. Thank you.
Thank you, Representative Schemmel. That's very much appreciated.
Any other questions? Okay, seeing none. There is no Chief Investment Officer report nor a Chief Financial Officer report. We will have an executive session. And Joe Marcucci, do you want to line this one up?
Yes, thank you, Chairman. There are 3 items on the agenda of the executive session. They are receiving reports from your counsel concerning ongoing litigation. There is also a report from the Chief Compliance Officer, who's also part of the Chief Counsel's office. The Sunshine Act allows an executive session to receive information and have discussions with counsel concerning litigation, also to have privileged and confidential attorney-client discussions. All of the items on the executive session are these sorts of conversations and are appropriate topics for an executive session.
Thank you, Joe. Don Bell, if you will take care of the business.
Sure. Before we enter the executive session, please give us a minute to take care of a few of the technical changes we need to make in the boardroom on your behalf. Also make you aware that after these changes are made, that you will be able to proceed. As a reminder, the public meeting will resume on this live stream when the connection is complete. As a reminder, this meeting is being recorded and is now being live streamed. Please proceed.
Thank you. We're back in public session, coming out of executive session. If there are any board comments, announcements, dates to remember, anybody have any comments? I think we had a very complete day today and well worthwhile. Board retreat, as has been mentioned, is March 24 and 25. The draft agenda is out there, and it's really a good 2 days we'll have with some discussions and presentations. The next board meeting dates, April 28th, will be the committee meetings, and May 5th will be the board meeting dates. With that, that ends the conclusion of the agenda. Do I have a motion to adjourn? Motion to adjourn.
So moved.
I hear motion second. Anyone in the question? Hearing none. All in favor? Aye.
Aye.
Any opposed? Motion carried. Thank you very much, everybody.